Hi, welcome to Trading Without Fear. In this episode, I'm going to be going over how to create a watch list, what I look for to place a stock on watch, and what type of big picture moves am I looking for. What I like to look for is the different stages, or what I call the psychological stages of the market. I try to find stocks that follow those type of patterns. What I have here on my top screen is set up for a 15-day, 15-minute. And on my bottom screen, I have it set up for a 3-month 1 day, or 6-month 1 day, or even a 1 year 1 day. And that's just to give me a direction of the overall big picture move, if there's any support or resistance. Sometimes I'll change this 15-day, 15 minutes to maybe a 30-day, 30-minute type of a time frame, or 20-day, 20-minute. It just kind of depends. Now, what I like to look for is multiple time frames, making sure that I'm not missing any sort of key levels of support, resistance, or any sort of entries. So as I'm starting to create my watch list, what I'll end up doing is just kind of starting from the top, working my way down to the bottom. And this right here is a good example of a trade that would have been really nice to take. I had a nice clean breakout over here, and if you look at the 1 year time frame, the breakout would have been at 0.0015, and it had a run up all the way to 0.006. So it had a pretty decent run from this breakout level. And I did not end up seeing this trade or taking this trade, but had a nice run up of 293%. And on Thursday, it kind of had a rest period. You can see it's starting to create higher lows, higher lows, higher lows. So if you didn't buy it during this time, you could have ended up buying it on Friday when it had a nice clean breakout over 0.0014, and there was a potential move there of around 40%. Now, because I didn't actually see this move on Friday, what I'm going to be doing is put it into my stage 1 watch list, so that way I can keep an eye on it. And it's always good to actually keep an eye on former runners, stocks that have the potential to move, and you'll start to see that when I put them into different stages. So you can see here, stage 1, stage 2, stage 3, stage 4, 5, 5, 1, 2. So it kind of gives you an understanding of what type of stages I'm looking for, and how to actually trade them. This particular stock right here did have a BBRW. It had the stages in the past, but currently the stages are no longer forming. It's kind of just, this one right here is technically stage 7, where it kind of just fades all the way down to back to where it started. So that one I wouldn't be putting on my watch. One of the things that I don't like to do is go too far out. I want to look at moves that's going to be happening in the next couple of days, maybe within a week. So that's why I cut it down to 3 months, 1 day. So just quickly running down through this one. See, nice clean breakout again. Kind of missed this one, but looks like on the 15-day, 15-minute chart, looks like it could potentially run again. So I'm going to put this one into stage 2. And the differences between what I consider stage 1 and stage 2 is basically the first initial push. So if I was to catch this stock back here where it had a nice clean breakout over this area, stage 1, when it pulls back, starts to retest that would be stage 2. And from here to here would be 3, pulls back again, creates number 2 again, and then ramps back up to number 3. So the stages can form multiple times during the stock pattern. Again, this is what I consider the psychological stage of the market. And there's a lot of different things. You can Google psychological stages of the market, and this is what you'll come up with. So when you Google psychological stages of the market, you'll get pictures kind of similar to this one. And this is one of the reasons why I consider the psychological stages of the market. So what ends up happening is you have what I call dynamic traders, people who have the ability to manipulate the market in any direction that they choose. They start to come in, so people consider that smart money, and starts to have a breakout of certain key levels, pushes the stock up. Other institutional buyers will start to see that. Now, it depends on what type of a price level it is. I think for cheap OTC stocks, institutional buyers are not going to be getting into OTCs. It's most likely going to be other people that's in there that's also pushing it up, or maybe even what some people consider promoters, or the people who's trying to manipulate the chart. They start to push up a little bit higher, and then there's going to be a first kind of sell off. And if it's a listed stock, it could create a bear trap where it suckers in shorts to actually cause a further squeeze during OTC stocks. I think during this time, it's where you'll start to see a lot of people telling you to buy the dip and to kind of get into it at a cheaper price. It's more of a manipulation and starts to ramp back up. So this would be number one, and then this kind of part right here is number two. Number three is when it starts to ramp up here and starts to go parabolic up here, and then 4, 5 on the dip, and then 4 again on the downwards thing. And oftentimes what they'll try to do is sometimes they'll form the same type of stages throughout the market over and over again. But more often than not, they'll end up starting to trickle down and fade, kind of like what that other chart did that I showed you up here, is where they end up kind of fading down. Oftentimes they end up getting back to exactly where they're at before. So, and if you look at that, it kind of looks very similar. When you look at the two charts side by side, they kind of have a similar type of a look to them, and where they kind of ramp up. And what it comes down to is how people perceive the market and the psychological stages within each trader that's participating in the market. So that's why I consider the psychological stages of the market. So what I'm looking for are stocks that follow that stage. So with this one right here, even though I have this nice clean breakout, when looking back at a 1-year chart, I don't see anything that could potentially prevent it from going up. Now I am keeping in mind that currently there are some regulations coming out with OTCs that if they're not pink current, they won't be able to be traded for a lot of platforms. So this is a good one to keep an eye on. It doesn't mean I'm going to be trading it. It just means that it has the potential to keep moving. And so I ended up putting it into my stage 2 watch list. And keep going down. You'll notice that I'm kind of going quickly. So what I'm looking for are stocks that I'm already familiar with, or patterns I'm already familiar with, and ones that have a really clean, identifiable trend, not only on the daily chart, but also on the intraday chart on this 15-day, 15-minute time frame. And with something like this CCAJ, it did have a nice big run up here. Starting to pull back. As you can see, it made a downward trend right here, and looks like it's starting to curl back up here. So I am kind of interested in this stock again. So what I'm going to do is take it and put it into the stage 2 time frame, and just keep it on watch. That way, if something does happen, I'll get alerted. I did end up putting an alert right here and right here. So that way, if it starts to come back with a VWAP on the monthly VWAP, I'll end up being alerted to that and know the direction, and maybe take a move if there's something there. Now, oftentimes, especially in OTCs, I'll end up seeing a chart that looks like this, where it has a nice uptrend in the daily. The volume isn't too bad. It's around 17, 12, and 8 million. But when you look on the intraday chart, it's very even on the 15-minute time frame. There's not really clean. There's not really a way for me to trade that. So I wouldn't really do much of anything with this. To me, I think especially with some of these trades trading almost 1 billion shares on a day, I wouldn't be putting that in any sort of watch list. May keep it in mind, but that's pretty much it. As if I see it later on in the future, at least I'm familiar with the stock and with the ticker. So I've completed this penny ones. Now I'm going for the 10 cents to 50 cent range. And it looks like on this one, there's a nice big push of 1 million shares on this one. And want to check the time frame with the 1 day, 1 minute, or the 1 minute. 1 day, 1 minute. And you can see here it also had a little bit of kind of randomness. I don't really like trading charts that have this kind of what I call spaces in between the bars. So I'm just not going to really do much of anything with that one. Oftentimes with these cheaper stocks, what I'll do is I'll filter them with the highest volume. I want to go for the highest volume charge first, and then kind of go down to the less volume, especially with these OTC, really cheap, under $1 plays. Oftentimes the volume is going to determine what the direction is. So this one right here, GTOR, it's a nice clean breakout again over the yearly range. So I'd consider a breakout on this chart probably right about here at 0.44, 0.044. So right on this day, it had this probably even 0.0462. It was a nice clean breakout, straight up trending late day, a nice gap up, and continued on. So what I'm going to do is add this to my stage one, and that one's a pretty bad chart. Now, one of the reasons why I do look at the 15-day, 15-minute charts is if you're looking at something like this, where it had a nice big push, nice breakout, pulls back, kind of consolidates for a couple of days, you can kind of see that consolidation during this time. You can see that if it can break out over that highs around the 11-cent mark, there's a potential of it continuing on in this particular trade. We're up 72% up to 19 cents. Again, it doesn't mean that I want to take the trade, especially with how choppy this stock is. I do like to see a lot tighter kind of bars, a lot tighter type of candles and stuff on the day, especially if you're looking at the 1 day, 1 minute chart. For me, there's not really much of a direction of where this could go. There's too much spaces in between the bars, and so because of that, it wouldn't be a trade that I'd be interested in. This is one that I have been put on watch. I was anticipating a breakout over the 12-cent range right here, pretty much on this red candle, and I thought if we could break out of that, there's a potential upside for much more. Now, this one I've been watching for a couple of days, so I think it may have a potential of a good run, but what I want to do is actually let it kind of come back down and consolidate for a couple of days and determine that it may actually start to curl up and continue going on before I take a trade on this. But it is a nice chart that's continuously getting about the same amount of volume. Even though the volume is low on these, around 3 to 4 million, the chart is uptrending. And for me, even on light volume, I've seen tickers kind of uptrend in the light volume. As long as the direction of the move is there, it's absolutely fine. This one right here is a good one to put on to watch for stage one. Again, these may not be ones that I'm going to take right away, but especially with stage ones, I do like to wait for them to actually form a stage two play. I'm better at going from stage two into stage three versus playing the stage one type of moves. So, and this one had a nice clean breakout over the 35 cents. And want to look at the 1 day, 1 minute time frame. And again, it's a very kind of inconsistent bar. Now, I don't mind holding on to stocks for a long time if that's what it is. I just don't like to play these ones that have a lot of spaces in between each candle. And so with something like this, Naked is a former runner. It has run in the past, and you can see it's starting to tighten up in this range. I'd probably put an alert up here for a breakout over around around 76 cents. If it can get above 76 cents, I may be interested in that. I put it into the stage two time frame or stage two watch list. And the only reason why I was able to determine that Naked was a potential good play was because when I saw it like this, I want to give a bigger picture. Normally, if I would have saw just that pattern, I wouldn't. But I am familiar with Naked as a ticker goes, and I do know that it has run in the past. It's also a stock that I have traded in the past. Got a 12 cents, sold it at almost 14 cents. Just took a small profit on that one, and ended up creating a stage one into stage two. Had a nice pop up. consolidated again from stage 2, and had this massive run into stage 3, and then kind of faded back down, but it's holding those gains around the 50 cent mark. So I do think there's a potential that sometime it could actually break out over this 76 range and possibly have a nice run up from that point. So that's why I'm putting my alerts on it and gonna keep it on watch. And so the stocks that I usually will trade are anything from sub penny up to, it depends on the chart, depends on the reason why it's running. Generally around $20 is my max. There are times where I've bought something that's a couple $100, like Telray back in the day when it ran up to 300. Recently, something like GME, I've traded that when it was like $130. So it kind of just depends, but my average range is between sub penny to around $20. And this right here is a really good example of the stages again. So it has, a nice clean breakout right here. This is stage 1, starts to pull back, consolidate, and when it starts to squeeze up and break out over this 650, 654, 660, something like that, it ends up having a breakout and continues on. And the great thing is one of the reasons why I like this type of a chart is it's basically an ABCD pattern on a longer term time frame. And ABCD patterns are patterns that I trade consistently very well. And so when I started looking into the psychology of markets, and I started noticing that they kind of form these patterns over and over again. And when I noticed that the ABCD pattern forms what is the number 2 stage, that's when I started putting a lot of my focus to buy into the number 2 and selling into the number 3. And so you can see here, A's when it kind of makes that first move from number 1 to number 2. So from number 1 has a nice pullback, creates the low, which is B, starts to consolidate and makes higher lows, squeezing up to the breakout level, which is where you buy into, which is C, and your sell would be D, which is somewhere within this range. So, and you can see the ABCD pattern and the different longer term stages. So the ABCD pattern on long term swing trade idea works really well for people who's into swing trading, is looking for the different stages in the market like this. Now you're probably wondering why I'd be taking a stock like this, even though it's just a new IPO. One of the things that I've noticed with the newer IPOs is that they'll end up having a pretty big run on the first day or second day, but then what they end up doing is creating the stage 2 pattern. So here's a good example of what I was talking about. So DATS is a former IPO, created a low, started consolidating, slowly curling its way back up above its highs, and because I was testing this theory, because I started noticing it in the market, I never actually bought this stock. But what I noticed is it was starting to curl up towards its highs, and you could easily have, bought this stock right here and risk down below this candle, which would have been about, maybe 14%, especially on swing trade, it's not too bad. Maybe even down here, risk like 6%. But the potential upside on this one would have been around 112%, and then it ends up doing it again. So it ends up running, pulls back, makes a low, starts to curl back up towards that high level, which at this point would be around $8.59. Let's just say 860. Once it gets out of the 860 range, ends up having a nice clean breakout and goes up another 42%. So I started keeping an eye on these new IPOs. It seems like they do oftentimes have these really nice runs after a certain amount of consolidation, and DATS is a really good example of that. So GOEV is a swing trade that I'm doing. One of the reasons why I got into it was the nice big ABCD pattern over the week on Friday. So I had a nice run up, pull back, price low, starts to really consolidate and push back up. This one, I was looking for a breakout over 815. I ended up buying into it with an average of a 816. So I ended up getting it here, added to my position up here, and was kind of risking down here where my stop order is at. So I have 29 shares, and currently just letting the trade work. And you can see it kind of had this nice push and run up on Monday. I don't know what's going to happen. If it continues going on, that's great. If it comes back down, gets me stopped out, that's also fine. But what I'm looking for is a potential profit of around 30% on this trade. So the 1 year time frame, it'd be selling into around where the resistance is at. So I don't know why it's currently running or what's going on with it, but it just formed a good pattern, so I took the trade. MRIN, even though it's a former runner, until it actually can, show more proof and it can actually potentially run again. I still think that back in these days where it was really, 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 really running hot, there's potentially still some more bag holders down in this stage 7 where it starts to just kind of fade back down. So it runs up. I'm anticipating a lot of people starting to sell into it on the way up, possibly keeping it down a little bit more. I don't know why it's up. I don't know if it's news that they got or something, but even though it's kind of up here, I'm not really interested in it. You can see there's a couple of times where I actually bought and sold the stock, and that's one of the reasons why I'm kind of just not interested in it. I still think that this is more on the backside, so as it's starting to pop up, the people who is back holding it down in this downward trend, they're going to start to sell out of it, which is going to give shorts another opportunity to kind of get into it. Now, I'll still keep an eye on it. If there's something, a good pattern that presents itself and it starts to break out of this, particularly the $12 mark, and continues a potential upwards trend. Other than that, I'm not really interested in MRIN. So one of the things is these purple lines here. TD Ameritrade's Thinkorswim does have the ability to kind of do a pattern type of recognition or pattern scanner. So this is calling it ascending triangle, and to me that's kind of not an ascending triangle. I would have to play around with the settings that I created on that. I did actually create one that's supposed to find ABCD patterns, and so far it hasn't been terribly accurate on trying to find those patterns. Sometimes it's okay, sometimes it's not, and most of the time it's just not very accurate in trying to find ABCD patterns. So this one right here is a nice kind of pop up, A, B, start to curl up and make new highs, with the range on this being as what it is on the ABCD pattern. It is only a 5% risk from this area to here. I'm going to go ahead and put this on watch on number stage 1. Now there are 7 different stages of the market. Traditionally, I'm only interested in stage 1, 2, 3. I skip 4 and go into 5, but I do actually track that, mostly just so I know which ones, and later on when I create my watch list, I'll show you what I do with those ones. And you can see here, stage 1 pulls back, kind of consolidates, starts to squeeze up towards that breakout level of 6. That's stage 2 into stage 3, pulls back, consolidates. Once it has another breakout, it ramps up, tries to retest those highs again, which is at $8. Finally breaks through 8 and gets up to 9. On the longer term time frame on this particular stock, you can see there's a an uptrend like this. I never took a trade on this just because of how erratic the stock actually moves. I wasn't really interested in something that has, really wide choppiness to it. So for me, EIQ is an avoid. I still have it on watch in case something does happen, but I'm not really interested in trading something that's that choppy. And ATER, I did take a trade on this today and got a nice, I think it was 25-30% pull back, starts to consolidate. I missed this kind of retest and breakout. This is something I am going to put on to watch for stage 2 play. It is a former runner. It has proven that it can actually move in the past, and it looks like it's holding that monthly VWAP right there. So normally with my watch list, I don't have any particular, like, this is my number 1 watch, number 2 watch. Normally what I'll do is I'll put them into the applicable stages, and I'll trade the high of the day. So whichever one comes up to the high of day on these time frames, those are the ones that I have my eyes. And if they either have done something on the daily time frame or the intraday time frame, that's when I'll actually take the trade. Until that happens, I'll kind of avoid that. This is a one that's I took and kind of got out a little bit, possibly too soon. So HRAA is a OTC stock, had a nice number 1, pulled back into number 2, had a nice clean breakout over 34-35 cents here. And on this day where it kind of ramps up, I get an alert triggered, and I end up buying it at 37 cents. And so it kind of ramps up, pulls back, makes A, B, and C is this area. And you can see here where this green arrow is. That's the algorithm that I created on TD Ameritrade to find ABCD patterns. So it said that on this particular trade, it'd be a good idea to buy it here. And let's say if you did buy it here, the best risk would be right around here, or even this green candle. So you're risking about 4% on that. So from where I got it into, which was an average of 37 cents, I was up potentially, or I was up on this trade about 20%. Right up here, so 25% at the high. What I was anticipating was a 60% move. Based on the data with OTCs, breakouts, they have a potential of moving up to 30%. Now, realistically, this chart actually never hit my risk. I was risking, so I ended up buying at 37. I was risking down here if it came down, so like 34, 35 was my risk, and it just never came down to that level. And I ended up cutting it on this candle at 37.5 because it started coming back down. And one of the reasons why I ended up cutting the trade early versus just allowing it to work was a trade that I took earlier in the week. That the amount that I took on it was a little bit outside the range of probabilities. I don't know what ended up happening on it. I had a great entry, but here's a trade right here. PSRU, same type of pattern, had a nice clean breakout, bought it on breakout. Initially, I didn't chase the breakout, I wanted it to confirm the breakout level. So I ended up getting it here at 0.009. Only got a partial position, didn't realize that I didn't technically pull them out, so I ended up adding into it. Still got an average of 0.009. And again, was looking for 60%. And from 0.009 to 60% would have been around this area right here, so 0.0144. And for some reason, I ended up putting my sell target at 15. I don't really know why that was. It was outside the range, and with the mechanical trading and data trading, even putting outside the range by, in this case, a 0.5%, means that there's potential that I may not actually hit your sell target. So because I ended up taking a loss on this trade on Friday, a small 2% loss, you can see here I started getting out of the trade. I ended up cutting HRAA potentially too soon. So I am going to have this a little bit on watch for the next couple of days. Potentially it can break out of this range, and it may end up creating another good potential trade later on. So once I'm done going through the main tickers of the top percent gainers, what I start to do is go through the stages and start to see which stages are starting to form into different stages. So for instance, if I see one that's from stage 1 starting to form stage 2, I'll move that into the stage 2 kind of watch list. And the stages that I'm looking for are basically on the daily time frame at this point, not on the intraday time frame. So here's another good example of one of those new IPOs. DNA had a nice run up on the day 1, pulls back, starts to curl up, had a nice clean breakout over $12. And with this particular trade, you can risk, about 3% pretty much for a potential upside of a reaching around 14. So you're looking at, maybe 20%, something like that. This one moves a little bit slowly, but that is kind of the new IPO type of trades that I was looking for. I don't really like the price action on that one, so I'll be out of that. Remove that from my watch list. Bros, Dutch Bros is a coffee place. We have a lot of the chains here in Colorado, so I am interested in this. I do think it can go up potentially higher, but what I wanted to do is actually come down, consolidate. Since it's IPO, it's kind of ramped up quite a bit, and with the state of the market, I want to see if there's going to be any sort of directional move on this type of a play. So, and with drawing trend lines, it's more of a subjective. It's one of the few things that I do consider trading as an art more than sciences, where you decide to place your trend lines. You can place it here, you can place it here, you can place it here. To me, it doesn't really matter as long as it's creating higher lows and higher lows. I mean, this higher low right here is still higher than this one, so you can easily draw a trend line from here to here, or you can even draw it from here to here. Either way, it works. It kind of depends on how you want to do it. But this one right here, if it starts to trend downwards from this point, then there may be a little bit more downside that it can be good for a potential swing later on. If it kind of goes up above this area, there's a potential that I can have a clean break at over 62, and it may be a trade that I'm interested in taking. Same thing with this new IPO. It had a nice run up, and it's starting to come back down. Something I may want to be interested in sometime in the near future. With this one, I'm kind of interested in it with I'm interested in it for kind of a breakout of this area. It's possible it could actually have a breakout with this big dip right here. That could be an indication that the chart's not very good, especially when you're looking at a big time frame. This is what Tim Sykes would call a bad sushi chart, where it just has this huge drop off. It's really hard for the charts to go back up. But sometimes I have traded those, and if they have a breakout, they can have a decent run. So this right here is one that I would consider turning into a stage 2 play. This one also is turning into a stage 2 play. The OPO went from a stage 2, it's now into a stage 3. So this particular trade on Friday had a nice clean break at over 35 cents, round up to 53. So from 35 to 53, We're looking at 51% move. So we'll move this one into stage 3. This one should technically be a stage 1 play. I don't know how I got put into the stage 2. I think I did that earlier in the video. This one is actually going from a stage 2. There was a stage 2 again right here. A nice clean breakout and ramped up. With AEHR, it's kind of a little bit scary to play at this point for myself. It's just been up so much. They did have earnings, but you can see the chart is starting to get a little bit toppy. If you're looking at the top of the chart of where it's kind of around this area, it doesn't mean that it can't go up any further, but I do think that this particular stock is starting to exhaust itself. Going from 650 all the way to 1675 is the high. Unless it has a pretty decent pullback, wouldn't really be interested in taking this trade, but it did go back into a stage 3. Nice breakout, pull back. Looking at the 15-day, 15-minute time frame. So we're gonna leave this in stage 2. Kind of had this drop down to here, and pretty much 12 point or 0.0121, which is kind of the support area right here. Ran back up, but because it kind of stopped at this area around the 0.0174, I do think it's kind of more on the backside of this trade, so I'm going to leave it at stage 2. Naked, I'm going to keep it there. CCAJ, EIQ. Now this may be a watch that I'm going to have on Monday, as long as the range is there and as long as the intraday pattern becomes more clean. It's something that I may take as long as it's clean. But if it looks like it does on Friday, it's going to not be a trade for me. ATER. Just keep it a watch. I want to see if it's going to have a breakout over any sort of range or break down any sort of ranges. So I'll put some alerts on it. If it breaks below 1122, I'll be alerted. Breaks above pretty much 14, I'll be alerted. So if it's just staying within this range, it doesn't bother me. I'll just wait for me to get the alert. That would have been some good trades on some of these days. Some good upside on that chart. Also, what I look for is based off the candles of what the range are on them. Some of them I can tell just by looking at the candles that the range isn't that great, and so like this one's being almost 20%. If I'm looking for 15 to 20% move, I don't want to get into a stock that has an average move on the day of only 15 to 20%. I want a range that's much greater than that. And with something as clean as DATS, even though the range on the day isn't that great, because there's no upside, this one's still 27%. But because there's nothing above it that can prevent it from going any higher, that's one of the reasons why I'm starting to look into these new IPO plays and start to consider them for a bigger swing. FERN, it's nice uptrend, pulls back and starts to continue going on. It's been a really good OTC trade, but it's still too high. I do think it's finally on the backside of that. I didn't take any plays in that one. I just didn't really see any good entries or anything like that. And when I did, it was already too late. So RANI as a former runner. I did buy into it, take a loss on this one. I do think there's a potential that I could come back, so I'm going to be keeping an eye on the stage 2 tank. Stage 2, it hasn't been trading a whole lot of volume the past several days, and if it breaks down, that's fine. MMAT, same thing. Had this nice run up, not buying into it, got out, another small loss on this one, anticipating it holding this breakout level essentially going on, but didn't end up failing. Retest that breakout level again, and it's kind of consolidating. So it's possible that it can try to retest that breakout level sometime later on, which is why it's on stage 2. So this one's kind of creating a descending triangle. There's support around this level. I think if it can actually reverse trend and start to come back up, there's a potential that this one may end up continuing on. So you kind of see that nice run up and that descending triangle right there. And he is a former runner in Y. I've never really liked trading this stock, so I'm going to go ahead and remove it from my watch list. I do think the ILUS potentially could end up being on the downside. And so it's traded at stop right here at 41.95. Try to test again, 41.95 failed. Test again, 41.95 failed. Tested again, had a small breakout, failed that breakout, came back down. It's holding support levels pretty well, but I do think this is kind of on the backside of the move because it tested it 1, 2, 3, 4 times. That right there, in my opinion, is resistance at this level. And the potential for the downside move is much greater if I can't actually hold over that. So I do anticipate this potentially maybe even gapping down on Monday on the downside. So I'm going to go ahead and move this one to stage 4. Stage 4 is basically where shorts want to be looking for overextension and where the chart has exhausted itself and potentially can be going down. There was a nice dip buy opportunity right here, but because it failed to break out over that range, 4 times, that's a good indication to me that the chart may be done. So this is a good example of the number 4. So stage 1, stage 2 is when it consolidates, stage 3 when it breaks out of that consolidation, starts to ramp up, and stage 4 is when it finally has that drop. At stage 5, what I look for is a first green day pattern. I like the first green days on the back side. There's a different first green days. A first green day can also be on the front side where there's a stock that hasn't had much volatility. So like for instance, where this one hasn't been doing anything for a long time and ends up having a breakout over a range and it's green on the day with heavy volume, there's a good chance that it can continue running on, possibly even gap up the next day. In this instance, it kind of topped out that first day and then drop down the next day. So I don't really like to take the first green day patterns on that initial push. I like to take the first green day patterns on the backside where it's actually had a former move. And I think the first green day patterns kind of form on the backside for a couple of different reasons. One, without much of a downside, hypothetically, if you're to be shorting at the top, down to the bottom, you're looking at about 19-20%. Most likely this will kind of bounce around the $22 mark is what I'm looking at here. So I think if we can come down to around the 22s again, there'll be a good potential for a bounce. Next level would be around the 1895s. So pretty much $19. I do think it's going to come down, probably test around the $20 mark again, and have a first green day move. That's give or take a little bit, but oftentimes the first green days will be very consistent with key levels of the chart. So with monthly VWAP being right here, with that being support around the $19 mark or the 1850s. There's a good chance that it can come down to 1850s. start to curl its way back up, and have a first green day pattern. And the first green day patterns lately have been having an average move of about 15 to 20%. So now this one right here was that stock that I had a perfect trade on, got out of it, had my expectations a bit too high. Maybe I got influenced, like I said, by something else, maybe Twitter, maybe my math was wrong, whatever the case was. But it's now started to come down, and so this stage 3 pattern is gone, and to me, the chart at this point is potentially dead. It failed to hold its breakouts. It actually had a pretty bad crash from the high of 1449 all the way back down to 0.0086. So I think even with this level, I don't really think PSRG is going to be going anywhere anytime soon. And so one of the reasons why I do like to have the 15-day, 15-minute charts on there, as you can see with this number one push, starts to pull back, consolidate, creates a low or lower high, and then during after hours burst creates another lower high and has a nice push up right here. So you can easily start to see these type of moves, and you can also have a nice risk to reward. So in this particular trade, you could buy anywhere around this area in this box, which is C, and here I'd probably be buying into like 574-ish and risk getting down here, so about 8.61%, and your potential upside on this is around 65% on that day. So there's a pretty good risk to reward on that one, and that's why I end up keeping those. Now, one of the reasons why I do keep former runners on there is because they have a chance to potentially run again, and you can kind of see that repeat throughout the watch list. I mean, create net, where oftentimes runners will actually continuously run something like life. I don't really like of how choppy and how undirectional the trade is, especially with it being on the downside, coming back almost to pretty much $10. That's kind of scary with that big drop from $12 to $10. So that's it. So all right, so that's it for this video, and hope you enjoyed it, and we'll see you next time.